We tend to see that prices that we're seeing today, of course, at $2.60, $2.61 a gallon, down 25 cents on average compared to this time last month. Took about 10 days for them to finally work their way to the pumps, especially after the holiday. If you look at how this sort of works, we sometimes see retailers who have dropped their prices to such a point that it's almost impossible for them to recover any type of costs associated with running a gasoline station, might come Friday and Saturday drop those prices even further. So the other shoe has yet to drop, and as we saw the 7% liquidation of crude prices yesterday, I would expect that somewhere around the 26th or 27th, we're going to see those prices really bite hard, and that will, of course, make even more consumers and drivers that much happier.
Are you surprised at what crude oil prices have done, Dan?
Very much so. Although I wasn't in league with those who thought we were going to see $100 crude, I did sense that there would be some firmness at the $70 to $75 range, especially for WTI. But I think the collapse related to things that may not necessarily have anything to do with fundamentals. I mean, there's a lot of conflicting information. The IEA, the International Energy Agency, saying, you know, we're at a critical capacity issue. We may very well find ourselves, you know, strained with production, safe and except here in America, over the next several months. You know, when one would have thought that given that global demand is still fairly strong, these prices would have held up. The fact that they have dropped so dramatically and so distinctly, I think, is probably a sign that they're likely to come right back up.